Our next guest does recommend a hike at the next meeting. Joining us this morning, former Federal Reserve Board Governor Rick Mishkin, now a professor at Columbia. Rick, happy Friday. Great to have you with us. It does sound like you want to make sure inflation is dead.
Yeah, so take a look at the numbers. The core inflation is still very stubbornly high. You're at a 4% level on the PC deflator. So the news has not been good there. It's a long way from the 2% inflation target. And so it's true that headline inflation has come down, but that really doesn't tell you very much about the underlying inflation rate, which is what the Fed cares about. So that's number one. Number two is the economy is still very strong. And you see it in terms of the jobs numbers, the stock market's strong and so forth. So from my perspective, the Fed really does need to keep raising rates. And, you know, it was not crazy to talk about pausing because we might want to see what's going on. On the other hand, the fact that these numbers have been so strong and the latest jobs report indicates that they're going to have to keep raising rates. Very unlikely not unless something really untoward happens or there's a big problem in the banking sector, but I don't see that. Maybe the Fed sees something that we don't see because they have more information. So right now, I think that the Fed's got to show that they're serious about getting inflation down. Long way away from where they want to be. So to me, that means that they need to hike. But, you know, I can see that a pause is a possibility, a strong possibility. But I would go a little bit more hawkish.
Yesterday, it was Bullard talking about whether or not we're in modestly restrictive territory. Do you not think we're there quite yet?
I think we are in modestly restrictive territory. There's no question in my mind that that's the case. Remember, by the way, that initially when the Fed started raising rates, even when they were doing 75 basis point increases, the Fed was actually in very accommodative territory at that time. So it's true that it takes a while for monetary policy to have an effect, but tightening really didn't start to really bite in until not too long ago. So my view on this is that we're a long way from where we have to be. Unless there are some bad things that the Fed's seeing that I don't see, they really should. The cautious approach now is actually to keep raising rates, and in fact, most importantly, and why I'd like to see a rate rise is that the talk of pivot has to go away. The Fed, no matter what, is going to have to keep rates high for a very long period of time in order to get inflation under control. If they did decide to pause, I think they have to be very communicative about the fact that if anything, there's a strong bias to raising rates further, and certainly there's no really off the table is any kind of pivot in the foreseeable future. You know, within a reasonable period of time.
Does that mean? I'm sorry to interrupt. Does that mean if you say talk of pivot should be completely off the table, that you have closed the door on the scenario where we see a hard landing, a deep recession?
Right.
Because that's the thinking is that they will do that. They will start cutting when things get bad.
Yeah, but actually, they have to really be seriously bad. Unfortunately, when you let inflation get out of control, the only way you basically can get inflation under control is by hitting the economy and slowing it down. And I think that's the key here. As the old commercial E.F. Hutton used to say, you have to earn it. And that's exactly what the Fed is going to need to do. That's the unfortunate reality when you've made a mistake and you actually had much too easy monetary policy, which I was very critical of for the Fed for a pretty long time before they started raising rates. If you get behind the curve, you're going to pay the price. But if you don't pay that price, then it's going to be even worse. Then, in fact, inflation won't come down, may even go up. You're then going to have to actually raise rates by even more. And that's the worst case. That's the worst scenario. So better to be preemptive and get it done than basically waiting and then having a real problem. We've seen what that's been like in the past. Not a good scenario.